equities market is reversing the negative sentiment witnessed in the last 10 trading days, driven by more half-year earnings. Juliana Ogunkoya, an investment research analyst at Meristem Securities, joins me to give us some headlight on what's playing out in the markets. Juliana, let's speak about sentiments we're seeing today.
Hi, good afternoon. Thanks for having me. So I would like to start with what has played out for the past couple of weeks. We've seen an extension of the bearish sentiment that's prevailed in the equities market. And last week, the market closed down in 4 out of 5 trading days. And the only day the market closed up was due to the buying sentiment on MTN. And for today, we've seen a lot of buying interest in MTN, which is driving the market to a positive close today.
Right, MTN getting the market screen. But how are investors responding to the half-year numbers we've been seeing? Quite a number are coming in a couple of days.
Yeah, so clearly investors are looking beyond the positive fundamentals on these half-year results, because majority of the sectoral performance has been very positive. Looking at the consumer good, the brewers, the financial services, even the healthcare sector, the performance has been broadly positive. But investors are looking beyond all of these fundamentals. They are pricing in the market risk, considering the current headwinds prevailing in the macroeconomic environment. This has prompted majority of investors to liquidate their equities position, which we've seen played out in the last couple of weeks. And considering the fact that the MPC increased rates at its last MPC meeting, and this also have been driving positive sentiment at the fixed income space, and investors are looking into exploring other investment options that are less risky for them to to invest their funds.
All right, now let's get to your take on some of the sectors. I was just speaking to Graham Heffer, the CEO of Okomo Oil. He was giving us a take on what their projections are and a run through on their numbers. And I would like to get your thoughts on that segment of the market, the oil palm space in Nigeria.
Yeah, so for the oil palm space, I think the global market has also been a major determinant of the prices of this commodity. And glad that in the domestic space, we're able to produce a substantial quantity that can sustain the domestic market. And this has been very positive for them. That's why we can see Okomo recording about approximately 70% increase in its top line, and even trickling down to its bottom line, and even being able to manage the increase in prices that other consumer goods companies are currently seeing. So the backward integration strategy is definitely a plus to this company. That's why we're seeing this positive result. And for other consumer good companies, the likes of the Boa Food, Nestle, USC, and Unilever, we can see this uniform increase in their top line. We see like double-digit increase across the top line. But these other companies that don't have like very strong backward integration strategy have been grappling with rising commodity prices.
Yeah, because I'm looking at Dangote Sugar Refining up about 60%, the profit after tax. But a company like Flour Mills, there just not so the result not coming as great as that. What's playing out for Flour Mills?
Can you hear me? Sorry, I missed that.
I said for a company like Flour Mills, we're seeing they're not reporting earnings as strong as its peers. What's playing out there for Flour Mills?
So for the flour millers, we can see they are more exposed to the rising commodity prices that we can see across the global economy. Looking at the Russia-Ukraine crisis and its impact on flours and wheat and other grains. And this global factor has been a major determinant of the prices of this commodity. And considering the fact that most of the flour mills import a majority of its raw material, that has been a major factor as to which its cost of production increased significantly. Although Flour was able to sustain improvement in its top line, we can see significant increase in its revenue. However, with a cost-to-sale ratio of approximately 90%, there's little we can expect to trickle down to its bottom line. We still have to incur administrative expense and finance its current loans and all of that. And that has been a major factor impacting the flour mills company.
Now, for the brewers, I'm seeing international breweries here up about over 100% in terms of profits for the period, and champion breweries as well following suit, up 141%. Do you think this is sustainable going into the next quarter?
So for the brewers, I think their revenue revenue prospects rather is largely positive, considering the current economic environments, and people can their social gatherings, and also these election campaign driven spendings and all of that, and also increase in capacity of some of these companies, and also increase in prices have been some of the major factors contributing to this brewers increase in revenue. However, for companies like international breweries that have been dealing with increase in finance costs and also cost of sales has been a major factor impacting its earnings quality and potential. While for champion breweries, on the other hand, champion breweries has been able to sustain a cost to sales ratio of about 61% based on its most recent financial, and also minimal finance costs on its record. I think this has been a major factor contributing to this robust improvement in champion breweries' earnings.
But looking at the market generally, though, do you think we can expect this momentum to continue playing by what we're seeing play out today?
You mean for the breweries
No,
sector?
just the market as a whole, the all-share index, looking at the improvement we're seeing.
Okay, so for the all-share index, I still expect investors to take profit on some of the tickers that have gained over the past couple of weeks. And like I mentioned earlier, there was buying sentiment on MTN. I think investors are seeing an opportunity to take position on this ticker because it's reduced significantly as of last week was about 190, and investors saw like an opportunity for bargain hunting on this ticker. And considering the fact that the MTN is a large cap stock, that's one of the major reasons why we're seeing the positive sentiment in the markets today. But for now, we're still seeing investors taking position in the fixed income space, and considering the level of attractiveness of the fixed income yield, we can't really call the direction of the market yet, as investors are still willing to direct their fund to the safe havens, and they are seeing the equity space as a very, very risky space for them to invest their fund now. However, if the current macroeconomic uncertainties start cooling down, maybe we would start seeing some buying interest pouring up. I also can't rule out the fact that some of the financial service ticker also portrays some level of buying also attractive during this time. For example, Zenith Bank is also on an attractive level right now, so she sees some buying interest on some of this specific ticker. But broadly, we still expect investors to divert their funds to the less risky investments. And as the markets gradually start to correct itself, we should see more buying interest.